Hello everyone. During weekend, two psychological macro event happened. One, our Niti Aayog chief highlighted about the IMF economic outlook release, and two, RBI released the statement that how much of the money they are going to transfer to Indian government. So in this video, let's look at those first, and then we'll look at our regular pre-market report for today, 26th May 2025 for the Indian stock market in terms of Nifty and Bank Nifty. This IMF World Economic Outlook was released by IMF on April 22nd, so it's not new. However, during weekend, it becomes a hot topic among all the news media, all because of our Niti Aayog chief BVR Subramaniam. If required, please pause and have a look. IMF estimated the India's GDP for the current calendar year 2025 as 4.187 trillion US dollars and Japan's GDP as 4.1865 trillion US dollars. Meaning, as per the IMF projections, India becomes the fourth largest economy in the world as Japan's GDP 0.5 trillion US dollars lower compared to India. Please note, it's just an estimation now. Coming to the present context, apparently in the 10th Governing Council meeting of Niti Aayog, its CEO highlighted this IMF data, stated that India becomes the fourth largest economy in the world and projected it to become the third largest by 2028. All these, as I said, is just a projection, so neither true or nor a lie. Either way, this will give psychological positive about the economy as everyone, including me in the YouTube, all started to talk about it. Here, the important takeaway is, in a year, usually IMF releases two economic outlook, one in April and one in October. Now, if in October's economic outlook, if the status quo haven't changed means, then it will be a neutral news from Indian stock market perspective. But by chance, if India didn't bypass Japan, then at that time, market might take this as potential negative. Moving to the second item about RBI, in the last financial year, in order to stabilize the rupee, overall RBI gross sold the US dollar for near 400 billion and gross purchased near 365 billion US dollars. RBI bought the US dollar when the rupee was trading at 83 to 84 units, whereas they sold all those when they're trading between 84 to 87 rupees per dollar. Hence, at present, RBI is having a net surplus cash, and in their statement, RBI said their board approved to transfer that surplus cash 2.69 lakh crore rupees to the central government as dividend. Just to give a comparison, in the financial year 2024, RBI transferred around 2 lakh crore rupees, and before that it was always around or less than 1 lakh crore rupees. This 2.69 lakh crore rupees is significant. Basically, this is the historical high value. And all those money RBI is going to transfer to Indian government through Indian banks, and government again going to spend it on the public finance. So this will for sure increases the liquidity in the banks. So potentially it's positive. However, from last Monday onwards, lot of analysts and lot of economic websites released their own statements as they are expecting RBI to give 2.5 to 3 lakh crore rupees as dividend to Indian government kind of. So now this RBI statement falls on the lower estimation, which is a bit of a concern. Either way, we can expect banking stock to be on focus. Then coming to US market, as we already discussed in the last week ahead video, Trump made a threat to European countries that he's going to impose 50% tariff on goods from Europe since trade deal with Europe is not going as Trump wanted, which in turn made the US market to open gap down like below 1%, but as day progressed, it recovered some of it. So in the end, Dow Jones was down 0.61%, S&P 500 decreased 0.67%, Nasdaq was down 1%. In case of VIX, it increased 10% and moved above 22. In line with that, on Saturday morning, GIFT Nifty also decreased some and traded at 24,840. Equating that with the spot market, it's indicating flat to negative opening. However, now US future market are trading 0.5 to 1% positive. Just for info, today New York Stock Exchange and Nasdaq both are closed. However, the proxies to Dow Jones, S&P 500 and Nasdaq futures now trading in CME platform as US 30, US 500 and US Tech 100 respectively. So it seems global momentum improved now. Regarding Indian ADR, in line with the Indian market, all of them closed positive. However, if we calculate the arbitrage, because of the weakness in the US market on Friday, both IT stocks showing negative arbitrage of 1%. At the same time, both the banks closed more positive, so it's having the positive arbitrage of 1%. In simple, IT stocks looks weaker and banks looks positive. Other than this, short covering increased the oil price by near 1%. At the time of this video, WTI crude trading around $62 per barrel and Brent crude trading just below $64.5 per barrel. Then coming to derivative market open interest, out of 35% expired last Thursday, 17% of new open interest was added, predominantly put options. However, on the call side, retail people sold significantly more call options and proprietary traders bought all those call options. On Friday, proprietary traders sold only 1% new call options. So now proprietary traders having net 4.3% open interest on the bullish side, and on the contrary, retail traders having net 3.1% open interest on the bearish side. FII wise, they are near neutral position. Then coming to index futures, retail traders having 60% of their open interest on the long side, FII 67% of their open interest on the short side, and proprietary traders was near neutral here. So overall, retail traders position expecting market to be on range bound, whereas FII expecting a breakout on either side and proprietary traders expecting a breakout on upper side. As a summary, last Friday US market was not good, but now in proxy platforms it looks okay. So global momentum is okay, and in line with a positive banks ADR arbitrage, we can expect Indian market to open positive. However, there is a small bit of a concern around IT stocks. Moving on, as per stock open interest, Biocon, Cummins India, SRF, Jubilant Foods, Grasim and GMR Airport were some of the 37 stocks that got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Chambal Fertilizers, Ashok Leyland, Adani Total Gas, Bank of India, SBI Life Insurance and Inox Wind are some of the 95 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, just for info, today US and UK market will be on holiday, and there is nothing that I'm aware of before and during market hours scheduled release that can influence our market. However, in the night for US, Fed chairman speech is the some of the items we need to keep an eye out today. Coming to technical, Nifty opened 30 points gap up at 24,640 and maintained its positivity throughout the day, then closed above 24,800. Thus, on the daily chart, Nifty formed a long bullish candle with minor upper shadow and negated the lower high formation of the previous 5 consecutive sessions. In addition, it surpassed the 10-day exponential moving average and traded well above all key moving averages, with upper end of the Bollinger Band remaining in the expansion mode. However, RSI is still below 60 mark, which is a bit of a concern. Hence, in the short term, trend looks positive with momentum likely to strengthen towards 25,000, and a decisive breakout above this level could potentially trigger a rally towards 25,250 to 25,350. On the downside, support is at 24,700. In case of Bank Nifty, similar to Nifty, it also opened near 20 points gap up and was positive throughout the session, then closed near 55,400. Thus, on the daily chart, Bank Nifty also formed a bullish candle and negated the lower high lower low of the previous 3 straight sessions and traded above all key moving averages. So, most probably we can expect the momentum to continue. On the upside, 55,700 to 56,500 expects to act as the key resistance. On the options front, the maximum call option open interest was at 25,000 strike, followed by 25,500 and 25,800, with maximum new call option rating at 25,800 strike, and then 24,900 and 25,300. On the put side, the maximum open interest was at 24,000 strike, followed by 24,500 and 24,800, with maximum new put option rating at 24,800 strike, and then 24,900 and 24,500. Thus, from options data, Nifty might face resistance near 25,000 level in the near term, with support around 24,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.